Smart 24, driving business.
All right. Thank you so much, ladies and gentlemen, for joining us this morning. A very good morning and warm welcome to the show. My name is Anthony SSEBBALE, and this is Financial Markets, special programming here coming in from the plot 42 Nile Avenue, Kampala, from where we hail to drive business. Remember to follow us on X at Smart24 TV now, and also check us out on YouTube. We are live at Smart24 TV Live. Now, for a couple of days and a couple of programs, we've been having several experts coming in from CMA. And today, I am very honored to have one individual who I've been looking up to, at least for a whole lot of time, to actually join us on the show. This is none other than Mr. Terrence Tumwine. And he's a very exciting gentleman. He has a lot of knowledge to share with us. And today we're actually not going to be looking at any particular topic. Interestingly, we're going to be looking at an overview of the capital markets in Uganda. Did you know that the capital markets are not even a century old in Uganda? It's just a couple of years, but they have evolved so much over this series of years. And he's going to be walking us through those details and more that you need to know about capital markets in Uganda. Mr. Terrence, you're most welcome to the show.
Thank you very, very much, Anthony.
Yeah.
Really appreciate it. It's an honor to have me on the show.
Yeah, absolutely. I've been looking up to this moment. Yes. Yeah.
I don't know the last time you hosted someone from the capital markets.
Very long time.
Very long time.
Yes.
But thank you very, very much. We don't take it for granted. The partnership with Smart24 to continuously drive knowledge and growth and informing people in the business sector on how to be able to how they can be able to invest, but also raise capital through the capital market. So thank you very much, Smart24, and thank you very much, Anthony, for having me.
Amazing.
Yes.
Now, let's first of all look at reflect. What has the Capital Markets Authority been like for the past 20 years, if so to say? Because when you look at the capital markets in Uganda, they date way back in 1998 and a little before that as well. But how has the capital markets outlook, how has it evolved over these years? And you, being the Capital Markets Authority, you are the regulators. You've seen this market grow. You've seen it start from A to Z. How has it evolved over the years?
It's a very, very interesting question. How has it evolved?
Yeah.
To be exact, I think it's way over 1998. 1996 is when government thought it wise to provide for a regulatory framework to hence allow for the regulation and also the proper establishment of the capital markets. And so Parliament sat and then enacted the Capital Markets Authority Act, which allowed for the establishment of the Capital Markets Authority, which is where I proudly work. Yeah. But what was the reason? Primarily, it was supposed to allow for the regulation and provision of products within the capital market space, to allow for the banking sector, to allow for the insurance sector, to allow for the retirement benefit sector, to allow for them to be able to channel their long-term savings into a properly regulated environment. But since its establishment in 1996, we got to see quite a number of companies come to the market. But why? Because government wanted to be able to relinquish some of the ownership it had in many of the public entities as part of the privatization engagement program, which saw many companies come onto the capital markets listing their shares onto the capital markets. Some of the
of course, I see the very first companies that actually got listed.
Yes.
Uganda Clays, you're looking at East African Breweries,
BAT,
they were initially government-owned companies.
Initially government-owned companies. So government had a stake in many companies I mean, Uganda Hotels, if someone remembers Uganda Hotels, that's a very, very long time ago, but a stake in many companies. But that government, as part of the reforms, government had to let go of this big burden of pay that it was, and hence impacting on the debt that it was having to take, because they had to sustain all these companies to grow, and so they let go of some of the ownership in these companies. New Vision is publicly listed, BAT is publicly listed, Uganda Clays is publicly listed, so many companies were let go of and through this privatization program. So yes, many companies have then come to the capital markets to seek and raise financing through the capital markets, and therefore now resulting into over 11 companies on the Uganda Securities Exchange, including the most recent secondary offer of
MTN offer. And wow, that was a very it was really outstanding. When you look at the oversubscription, it showed that people have actually now seen and actually noticed the importance of investing, because I remember at the initial public offer we didn't have as much clout.
We didn't have as much clout, as a result of many factors.
I know. Now let's look at, when you look at, for example, starting 1998 up to date, I think we had 0 companies in 1998, and today we have over 18 companies that are listed. How has the Capital Markets Authority been able to achieve this? Because you're introducing this concept of investing in companies, which was alien to most people, and even people who are actually technocrats and business people didn't have any idea probably what this should look like, right? So how did you convince people? How did you convince companies to actually get to list on the Uganda Securities Exchange?
First of all, it's not an easy thing to list. Listing is something that will cause a company to come to the markets. And when you come to the markets, you're opening up your book. But in opening up your book, you're raising capital that you would not have been able to raise. So I must say, and I must emphasize, this has not been an effort by the Capital Markets Authority alone. It's been an effort by many stakeholders. But also the companies themselves have been able to just desire to come to the market and actually either let go of some of their holding. For some of them, investors had invested in some of these companies, and they let go of their ownership and were able to list on the stock exchange. Some of them, to be honest, it was part of the National Broadband Policy, which was part of government strategy to cause Ugandans to be partial owners into these companies. Some of these companies were, whenever they would get dividends, these dividends were sent out. And when they were sent out, the money that was being retained in Uganda was almost minimal. And government was saying, can we have more Ugandans be part of this? Can we have more Ugandans also share in the profits that are being made by these companies? So part of the National Broadband Policy was to encourage, broad ownership by Ugandans to be able to partner with these companies and also see the growth, but also benefit from the dividends that they can be able to earn from these companies. So it has been a multi-sectoral approach with different stakeholders. But also I'm happy that the companies have been able to see the Uganda Securities Exchange or any securities exchange within the Ugandan market as visible, as worthy of being able to raising capital through the public listings. But we also encourage many more, because the public listings allow more visibility in terms of branding, but also allow you to get people to invest into your company, but also ownership into your company. So the more people that you are allowed to participate in the listing or the public offering, you're actually inviting them to partner with you in your growth as a company. So for both the investee as well as the person looking for capital, there's a gain. There's a gain.
And I agree with you on the point of capital repatriation. When you look at some of these companies that are listed, they're not found here. For example, I can use an example of Stanbic Bank. It's founded under Standard Bank in South Africa. But us being able to have the public actually own part of such a conglomerate, it's an absolute pleasure, I think.
It's an honor.
And an honor indeed, Now, let's talk about the main components of the capital markets in Uganda. Of course, capital markets products have evolved over the years as well. And I'm sure you, in 1998, you could talk about a unit trust and probably no one would understand that. But today, it is one of the most popular investment vehicles in the capital markets. So walk us through some of the main components that you can highlight and some of the new ones that have just come up, and give us some few differences.
Thank you, Anthony. Thank you very, very much. First of all, maybe just by way of guidance. So there are quite a number. The capital markets is there are many products for both the person looking to invest, but also the person looking to be able to raise capital. So I'll just start from the person looking to invest. So for example, should someone look for an investment opportunity, there are close to 3 opportunities, dependent on where you are. But let me just focus on the retail for now. So from the retail, me, Terrence, Tumwine, I might have possibly like 100K that's lying idle, which I possibly can eat immediately, and it gets over immediately. You just know that you go to a restaurant, the 100,000 goes, and you've hosted a few people, and the money is over. So if I have that, where can I be able to put that to work, to be able to grow, to be able to give me a return that even when I'm sleeping or I'm at my day job at the CMA, I can't be able to earn a return. One, there's been the popularly known right now, I think the collective investment schemes, it seems to have taken on a legs of its own and run at a rate that even us, we are very impressed about. 2, there's the bond markets as well. Do you have excess money that you also want to be able to invest, short term, long term, but also even if you want to be able to liquidate it? We've seen a growth in turnover in the bond market. And everyone has been asking us, but what is this bonds? Everyone's asking us about bonds. I hope we'll get time to be able to talk about it later with Anthony. But also there's the securities in the equities market. Like we've been talking about the shares that are the companies that are listed on the stock exchange. You could choose to invest or buy some shares in. He's talked about Stanbic. You could choose DFCU. Is Umeme your option? Is
Airtel,
or something that you want to do, or even
the babies on the exchange now.
So whichever you choose to invest in, you can be able to start your investment journey with any of those. Now that's from the retail perspective. That's from the retail perspective. But it's possible that you're a company that's trying to be able to raise equity or trying to be able to raise capital, and you're saying, I can't be able to raise capital. The amount I'm looking for is bigger size, or it's even smaller size. Now, dependent on your level, there's something for you within the capital markets. So for the early stage, those who are starting out and it's an idea and you're watching me and you're thinking about this concept and you want to be able to start it, you can't be able to get into, you can't be able to tap into a venture capital fund that can be able to walk with you the journey and start with you and help you formalize your business into something that's be able to generate revenue for yourself, but also for the co-founders in this. It's possible that you're at that level of growth, like the minister said, beginning to. You're possibly at that point, and you know that maybe the bank financing may not be enough for you, or even possibly friends and family are not offering the financing that's enough for you. Because nowadays, when I'm starting a business, the first person I may get to is Anthony, and I'll ask, so Anthony, well, you know, I sent a quote target. So, but there's that opportunity at the early stage. You can be able to get friends and families, or you can get into a proper the venture capital fund or something. Now you're at the growth stage. The bank financing is not enough. You need a strategic investor to walk with you and walk this journey with you. You now can be able to have this journey with a private equity fund. They work with you and help you structure your business, and actually partner with you, put governance structures in place, and possibly you can grow. You can grow to reach external markets. They can be able to have this partnership with you and give you contacts to maybe suppliers that you didn't have information about, because they are strategic investors. For them, they are looking for return, but also they are looking for growth of the company. Should the company grow, company X, Terrence Incorporated, then you can come and possibly look towards raising through the public markets. So there's all this infrastructure for you, and they're all Ugandans are happy to own 100% of 1 liter of water, 1 liter of water, 100% of a bottle of water, instead of owning 1% of the ocean. Now, which one would you prefer, Anthony?
I think the ocean.
The 1% of the ocean.
Yes.
But would you still want to control the 100% of the bottle? I thought you would prefer control.
Yeah. But also 1% of a big thing gives me more pride, and also gives me the I'm rubbing shoulders with the giants. You know,
with the giants. With the giants.
Yes.
So in Uganda, it seems as though everyone wants to be busy with their
own
own business, as long as it is mine. I know that Terrence, I'm the one who started it. I'm seeing it grow. I have the one who has, but that thing is growing, and it's possibly keeping you extremely busy, and possibly giving you tension, giving you pressure. But it is your business, and it is very beautiful. There's no problem with it. But is it possible that me, the founder, I may to be the person who is working to the detriment or against the growth of this company? Why? Because the ideas I have are only as small as this bottle, only as small as what I know.
Yeah.
But what if you invited other people into your business? Now that's where Ugandans say no, because those people are going to make me increase my visibility. 2, those people are going to make me increase my sales. In increasing my sales, those people are going to make me put my books in order. I don't want to put my books in order because for now I'm okay with this bottle. But what if you put your books in order and then you become an ocean? And that's what we simply want to communicate. 1% of an ocean, 1% of an ocean, I think is much better than 100% of this bottle.
Yeah.
So we want to be able to speak to Ugandans, to speak to you who is watching right now, you're looking to expand your business or you're looking to grow this idea, it's okay to let go of some shareholding as long as you're inviting a strategic partner or investor or someone who's going to enhance your reach. And in enhancing your reach, it is okay to pay taxes.
Yeah.
I know the conversation has been around IFRIS, and I know it is okay to pay taxes.
Yeah.
But if you're paying taxes and someone is helping you grow your business from this into an ocean, you can't be able to partner with someone.
Yeah.
And the capital markets, I mean, it sometimes has been belittled to listing on the public markets. Listing on the public markets is just one of the ways you can be able to raise capital.
Yeah.
I hope that tries to simplify it.
Yes.
You can't be able to invite, so the people that have been able to speak about at this ideation stage, that's part of the capital markets, but at a lower level. The people who are at this growth stage, that's also part of the capital markets. Private equity funds, there's quite a number of them that are in Uganda, and many more are coming as a result of the tax exemptions that have been provided, or that will be provided, hopefully, if Parliament passes the tax.
Yes.
But yes, so that's private equity firms are also growing, and they're providing funding for you. Then there's also the public markets, which, dependent on the stage of the business, you can't be able to put it out there. You could be able to invite different people to participate with you. Yeah. But now on the retail side, sorry, I just to conclude the retail side, it's possible that you're looking for an investment opportunity through the capital markets also. Now, there's already publicly listed companies which you can be able to tap into. Visit any of our brokerage firms, the licensed brokerage firms. Please, it is at this point, Anthony, I want to beg for your permission to tell the audience that's watching us today that please refrain from investing in anyone that's not licensed by the Capital Markets Authority. Yeah. Because we put a number of regulations, quite a number. It's not easy to get a license from us. And so we invite these licensed persons to come to us, and then when they come, we sieve them through, we check their governance structure, who are the people that are working with them, who are the licensed persons, who are the persons who are going to be running the operations of the business. By the time they get a license, there's a lot of work that they've gone through. And we annually check them and visit their premises to see regularly to ensure that
they're still working.
That they're still working. Yeah. But unfortunately, Ugandans have lost money through.
And that's exactly where we're going to go after the break.
I passionately would want to speak to that. Yes.
I know. And most of the people that are watching us have been heartbroken by so many schemes that have come up and actually cheated Ugandans of their funds. Now, when we come back, we're looking at the regulatory framework of the CMA, what you've put in place to ensure these schemes don't happen. I remember before one scheme particularly closed, you put out a notice before it closed. And eventually, in a few months or even weeks, it closed. But Ugandans were still going out there to invest. So we want to know, what are some of those regulatory frameworks that you've put in place that ensure that Ugandans' monies are safe? But also, before I leave the CIS, you mentioned earlier that it's indeed one of the popular ones. And looking at your quarterly report for the first quarter of this year, it collected over 2.6 trillion. And that was a growth from 2.3 trillion in the quarter that ended December 2023. And the number of accounts have increased to 79,000, which is an overwhelming number indeed. Why collective investment schemes, and why are they much more popular than any of the other products we've mentioned? Is it a good thing or a bad thing? We do that after the break. I know you would want to hop in right now. But ladies and gentlemen, we are talking to Mr. Terrence Tumwine. He is the Senior Research and Marketing Development Officer from the Capital Markets Authority, and hope you are enjoying as much as we are. We take a quick break and return shortly. Don't touch your dial.
Smart 24, driving business.
Are you a female business owner in Uganda looking to grow and transform your business? Grow empowers you with access to entrepreneur services, accelerating your business growth from micro to small and from small to medium enterprises. Grow provides comprehensive support, including training, startup tools, business formalization, certification, networking opportunities, access to affordable credit and grants, coaching, and mentorship, with all resources available for free. For more information, please visit grow.go.ug. Contact the PSFU Grow officers at Trust Towers, ground floor, plot 4 Chadondo Road, Nakasero, or the Ministry of Gender at plot 2 George Street, Simba Manyo House, 3rd floor. Call us at +256 394 514 071. This message is brought to you by the Grow Project, a Government of Uganda project implemented by the Ministry of Gender, Labour and Social Development and PSFU, funded by the World Bank. Grow, generating growth opportunities and productivity for women enterprises.
Amanya gange nze Namtebi Sharon nga nkolera wano wennyini Saka Kirombe oba Makindye. Empangula gye nawanguddemu ssente mbadde nga nkozesa mobile money nga nsindika school fees w'omwana ku ssomero. Okutegeera nti mpangudde, nze mutima neegambye nti kambalinde bamale okujja ndyoke nzikirize nti mpangudde. Kyenyinza okubagamba nti si byabafere, weewaawo abafere gye bali, naye ennamba eri emu yokka, era bw'eba ekukubidde omanye eyo si yabafere. Mpulira bulungi nnyo 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 era ndi musanyufu nnyo. Naye MTN mobile money mbebaza nnyo, mwebale nnyo, mwebalire.
Together we're unstoppable.
Cooking oil like no other makes your meal so sweet and scrumptious. The taste of Uganda, yeah, the taste of Uganda, the taste of Uganda.
Luxury redefined at Seasand Hotel as you indulge in the splendor of elegant living fit for the royalty that you are. Step into comfort, pampering and blissful customer-centric service as you select from our range of comfy exquisite living quarters furnished to meet with your royal preference. Surrounded by scenic beauty, our tropical setting allows you to escape the clamorous ordeal of city life. Our ambient green gardens will guide you to a place of revitalizing rest. The 3-star restaurant caters to your palate, serving your choice menu ranging from exotic cuisines to local delicacies. Our chefs will serve you full course meals for a truly out-of-this-world culinary experience. Our fully stocked bar to whet your throat, from renowned global brand whisks, brandies, gins, beers and wines to our locally celebrated beverages, you will not lack for any brewage. It's an all-new experience in the East at Seasand Hotel. So visit today at plot 15 to 19 Spire Road, Ginger, or contact us on +256 751 719 960 and +256 785 354 614 for reservations. Seasand Hotels, luxury redefined.
We've been through a lot. The only reason why we are still standing is because we're the Kirundas. And therefore the need to keep that name and legacy alive.
There's something you're not telling us.
What are you talking about?
So you knew about the people that killed Teresa and you kept it to yourself?
Lucy, the last time we did not do it properly.
Smart 24, driving business.
Welcome back, ladies and gentlemen, to the show. This is Financial Markets. Remember, we are live on YouTube at Smart 24 TV Live, but you can also check us out on GoTV channel 394 and DSTV channel 372, and you'll be able to get all your content live and clear. We are with Mr. Tumwine Terrence. He's the Senior Research and Development Officer at the Capital Markets Authority, and he has an experience of over 8 years in finance. So we're talking real big finance here, right? And we've been discussing what the capital markets has been like in the first session. We've looked at the history, we've looked at the products, and the opportunities you can harness from the capital markets that are present here in Uganda. If you're looking to finance your business, if you're looking for growth, if you're looking to own 1% of the ocean rather than 100% of a bottle, then you should be looking at the capital markets. Now, Mr. Terrence, let's first of all, before we get back into the discussion, personal financing is very key, especially to you as Capital Markets Authority, because you know that's where everything starts, from the personal financing. You look at how people handle their daily finances. At the end of the day, I saw a report from UBOS that 75% of Ugandans live off debt, meaning most of us live in negative, the deficit budget. We spend more than we earn. Let's talk about how personal financing really is important and how Capital Markets Authority is helping Ugandans to manage personal finances. Because I don't think you can spare money to invest in capital markets if you don't even have money in the first place, if you're in debt. So how important is personal financing?
Thank you very much, Anthony. It's a very, very good question. How important is personal financing? Just before the break, I think we spoke at length about quite a number of investment opportunities within the capital markets. And it's also possible that even while you know about all the investment opportunities, you're thinking, how can I put away what I don't have? How can I put away what I don't have? Is it possible that what you have, you don't know how to use? Is it possible that what you have, you don't know how to use? The Chinese, I like to look at the Chinese and how much work they do. They put in a lot of work. But they save quite a bit. They save quite a bit. They are willing to sacrifice. I mean, between eating out and packing, that's more food from home. That's more food from home. Or that, what do you think, maolo? Maolo. You're thinking, maolo, how can I be, for example, be seen in office eating maolo.
From a Tiffany.
From a, literally, from a small container like this. First of all, those guys, by eating maolo, they don't have to fight a tummy. You see Ugandans struggling, fighting a tummy and the like, because you're struggling, you're eating all these foods. But the person has eaten this much and they've been able to go back to work, to focus on working. In summary, what I'm trying to say is this. Is it possible that 100,000 or 500,000 that you're earning, you are living beyond your means? When a new phone comes out, I want a new phone, I need to get a new phone. The smartphone is, how much is the iPhone? The 16, I think. Is it 16? 15? That's, I don't know.
15.
You want to be able to keep abreast with whatever is happening. Or you've earned your money. I don't know whether you've noticed, this is the last Friday of the month. There's going to be jam in town. Why? Because everyone's going to go out. Chadondo. There's so much traffic. In the last Friday, it's like, because maybe some of them people have received salary. And then by the next week, we are back to square one. Is it possible?
Money lenders are doing business by the second week.
They have a part to play, but please, are you at their gates every single time? Is your car on security. If you are living like that, it's possible that you may not have some extra resources to spend or to save or invest within the capital market.
Yeah.
And I want to share a small principle. I hope it's possible that you can be able to take it up. Let's just give an example. Let's say you're earning 100,000 per month. Let's just give an example. It's an example. 100,000 per month. There's a principle called the 5 Jewish Jars, which has moved to be a very, very simple principle. Very, very simple principle, irrespective of your religion.
Okay.
5 Jewish Jars. 1, you are encouraged to put aside 10% of the 100,000 into, I don't know which kind of God you believe in. I don't know whether it's Allah or whether it is God. You give it to God. The Christians call it tithe.
Yeah.
Okay? 10% you give it to God. 10% give it to, make sure you put it aside for saving. Saving for an emergency.
Yeah.
And an emergency is not, I don't know, give an example, school fees. School fees. School fees. And then you're saying, no, I have an emergency.
To pay school fees.
You know that.
That's an obligation.
It's an obligation. It's part of your expenses. So school fees should fit within your expenses. And you know that in August or September, kids are going back to school.
A vacation shouldn't be an emergency.
Sure, vacation should not be an emergency.
Yeah.
So 10% is for saving and to build for your emergency fund. So 10% tithe, 10% saving, 10% give. Give, I don't know, to charity, give to the underprivileged, give wedding meetings. Some of you give over 50% of your salary. I want to give to wedding meeting.
Yeah.
But please, can you limit it within the 10%? So 10%.
No, but sometimes you're in that launch and then, you came with your 10K and then the first person says, I've given 1 million. And then you still start feeling uncomfortable. And then you change, instead of the 10K, you give all the 100K you can.
All the 100K?
Yes, it's your salary.
So how are you going to go home? or you find you're sitting next to someone that you're trying to. I think we need to live beyond that perspective.
Yeah.
Is it possible that you can send that 10K and say, I'm sorry, but this is what I have.
Yeah.
And it's okay. It's okay, by the way. Yes, someone will say, but how do you give less than this? How do you give less than this? But you work with Capital Markets Authority. You expect you to, but this is what I have. I have 10,000 right now. Yeah. So this is what I have. At least it can buy a bottle of water for the wedding. An extra, if you can do. So 10% tithe, 10% saving 10% giving,
give out.
20% an investment. An investment. And we're going to be able to talk about some of those collective investment scheme, the equities. 20% investment. And let that thing give birth to another child who you're going to divide like this.
Yeah.
So 20% investment and make sure you're living within 50%.
Wow. So this 50% you can go out, you can do vacation.
Make sure you're living within
but
50%.
Yes.
Because if you're not saving, if you don't have an emergency fund, if you don't have just money that in the event that you get
where do condolences fall?
Condolences would fall under giving. Giving.
Okay.
Yes. Giving.
Okay.
Yes.
Those are things you don't prepare for.
It's life.
Yeah, that's
life. Oh, worst case scenario. If this person is extremely close to you and you really have to, maybe you can tap into your saving and then replenish your saving. But make sure you have these Jewish jars divided such that when the 100,000 comes, 10,000 goes to the church. God to church. 10,000 goes to the emergency fund. 10,000 goes to
charity,
or giving or whatever. 20% goes to
your collective investment,
which is
scheme, your equities
or something.
Investment.
Then 50,000 you pay your rent. That means you have to go down. Downscale to be able to live within the 50%.
Talk about rent. What do you think should be the percentage? Yes, we're looking at the 50%, But if you could also go into the 50%, there's rent, food, and so on and so forth. But there's some constants like rent. Many people are renting, for example. But what percentage should rent take as well?
So
your income?
I think that's a difficult question because I think for me, I may be willing to go to a down thing that's going to give me 20,000. But because Anthony is here on TV, he cannot be seen walking out of those Mufunda or something. But for me, I may be comfortable. I may feel, no, it's okay. As long as we are having food. And I don't know Anthony's expenditure habits. Maybe he has children, or maybe he doesn't have children. So I can't be able to. But the truth is, you must rent with somewhere that you're comfortable in. And therefore, while I'm saying 100,000, it's possible that you can build it to ensure that you can be able to rent somewhere comfortable. So either do a business or something where you can be able to invest and therefore give you a comfortable place that you can be able to comfortably rent, whether it is wherever. But if you're spending 4 million on rent because you want your friends to come and see that I'm living in a, I don't know,
Airbnb,
and you're living large, you're living large. Now you have to make those personal decisions, and in terms of personal finance. So you can't have money to invest within the capital markets if you don't have something that you're putting aside and investing.
Wow, that's a very amazing concept. A 5 jazz, Jewish jazz, right? I'll never forget this one.
10%,
10%,
yes.
In other words, 50, you have to always get 50%. You know it's not going to be spent. Because I've seen, according to the 5 jars, there's only 1 jar for you to be able to spend on, and that's the 50%. So you're earning 1 million, you have a 500K. The 500K, investing, saving, charity, church.
Surprisingly, you can't be able to live within what, just imagine, wherever you are, by the way, whether you're earning 1 million, whether you're earning 5 million, whether you're earning 500,000 or 200,000, there's always someone lower than you who is struggling much more than you think.
That's right.
So you just need to push yourself a little further, and you'll be amazed at how far you can be able to go to be able to sustain and grow your wealth. Because for sure, for now, I may be 40, retirement is coming. If you don't have anything to speak about, you're actually going to see what it means to be retired and you don't have anything. All because I may want to have lived large and maybe I'm paying a mortgage for a larger part of my life because I'm just trying to live and please people.
Wow. That's amazing. It's very amazing. I wish we could have a day where we could only talk about personal financing. I think it's very, very important. Because I look at all the statistics and they're scary because 75% of us are living in debt, and then less than 1% of us are earning $1 million. I saw that as well. Yes, you can imagine. But even today, when you get, I can give you $1 million this morning, and you go for shopping, kids, and all, and you come back with nothing. But imagine many are not even earning that.
Anthony, I sincerely agree. Sincerely agree. I was on a border, and the borderman, I went and paid 100,000 for quite a number of goods, and when I paid for them, I just came back with, I think, 1 bag. And I told him, oh my goodness, this is what inflation actually means. I used to carry 3 bags, but I can only carry 1 bag. And it's a reality. So if you don't have savings and investment for the future, and something that's giving birth to another child that you're living off, and you're living above your means now, then I don't know what's going to happen in the future if you're not investing.
There's some outright where some motivational speakers say, don't look at spending less and more. But then I saw another very scary statistic recently that showing that if the new, I don't know if it's now a finance bill like the one we have in Kenya, is passed here in Uganda, the people earning 10 million and above will be taxed 58%. That's so scary because even when you're earning more, you don't have a chance of actually getting all that money you're earning, right?
Because you're not channeled to the right producing, I think in simple terms, the producing opportunities. But yes, I agree. Well,
let's talk about collective investment schemes. Back to the products here. They have become so popular. And when you look at the statistics here, really the numbers just keep on growing every now and then. numbers of accounts are up to now 79,000 and over 2.6 trillion of investment in the first quarter of this year. I know the second quarter is also up underway, and I am pretty sure there is more and more that is coming. Why? Why is it so popular? And what could be the future of this collective investment scheme? Because it's growing so big at a very fast rate.
Thank you very, very much, Anthony. What is causing this growth? First of all, I must say that it has not been a singular effort by the Capital Markets Authority. I think government has been very, very gracious enough to allow for the growth. And someone might ask how. To be able to allow and encourage savings and putting aside money into for long term and for people to be able to build a long-term savings culture into the economy. Government allowed for this sector to be exempt. Government has been very, very kind enough, and we don't take that for granted. And it's one of the things that has actually caused it to grow. So for now, there's a tax incentive to it. So government has been very, very kind to that effect. Two, we're also privileged to have continuously engaged the masses, you and I, many other people, wherever, to be able to partner or to be able to grow their savings through the collective investment schemes. Smart 24 has been kind enough to continuously provide us some time to be able to educate possible investors. So there's a lot of mass sensitization that has gone throughout the country, throughout very many different players in the investing opportunity. And let me just, a very, very interesting statistic. December 2018, the stats reveal collective investment schemes were about 128 billion. 128 billion. As we speak now, I'm tempted to say they may cross the 3 trillion mark. 3 trillion mark. Why? Why and why, you're asking? There's been tremendous growth. Collective investment schemes, the way they are structured, the way the legal framework is set in place, it's to ensure that ultimately the investor, you and I, are protected. So there's a facilitative regulatory framework that has allowed for the investor, the person who puts aside that 10,000, that puts aside that 100,000, to be protected. That's one. Two, it is open-ended. Open-ended. What does open-ended mean? If I invested today, within a week, after a week, and I said maybe I have, going back to the emergency fund, maybe I have an emergency, and I have a medical emergency, my children or my wife or myself, I'm sick and I have to go to hospital immediately, or maybe on my way to work, a boarder knocked my leg and I just have to get into a hospital. So I can just go on my phone and be able to withdraw this money. And within a week, within the day by close of business that day, I can't be able to receive it. Or worst case scenario,
with the interest as well.
With interest. So first of all, I've invested. Two, I can be able to withdraw it. Now, what difference does it have from the regular savings schemes? Now, when I invest it immediately, today, or say on Monday, let's say I invested it on Monday, I can be able to generate, it is managed professionally by a professional investment manager. By the time they come to us and get a license from us, there's a lot of saving that has gone through. And these are people who have been on the market for a while, who analyze the stock exchange, whose daily job is research. To look for the best return. Daily. Was it in Kenya? Was it in Uganda? Is it in whichever part of the East African region? What is giving the best return? And how can I be able to deploy the small savings that Anthony might have given the CIS manager? So there's a professional manager whose daily job is to ensure that there's a return onto your account. So these returns are daily.
Yeah.
Are daily. There's a time I think you hosted Martin Owini, and then he said that instead of keeping that money under the bed, collective investment scheme managers have now given that opportunity to allow you to put your money there and then have it grow on a daily basis. So let's say you invested 1 million. So 1 million, it's possible that you may be able to earn at the end of the year about 120,000.
Yeah.
That's about 10% growth. So if you keep it there and it may amount to over 120,000. But in addition to that 120,000, there has been a compounding effect on a daily basis. So one, what has caused the growth? A facilitative environment, a regulatory environment by the Capital Markets Authority. Two, government's encouragement to allow for the growth of the sector. Three, also the fact that it is managed professionally by a professional investment manager. But four, also, is the fact that it earns interest daily, and that interest compounds to be able to allow you to improve on the annual growth that you might be able to receive. And five is the fact that I can be able to access these funds as and when I need them in case I have an emergency.
Amazing.
So as we speak right now, we're almost crossing the 3 trillion mark, and we dream of it being as accessible as possible through your phone, through your car torch, through whatever, and we're praying and driving, hopefully driving growth within the sector to allow for people to access them, whichever phone that you're able to use, and even with simplicity and improved products.
It's amazing. I can't agree with you more, because even the ease of understanding, because when you look at, for example, someone investing directly into stocks, they have to do their own personal research and, understand financial statements. All that work is being done by the fund manager in this case. And they're doing diligent work, because they, at least from the returns that are being received daily, people see growth on their money, which hasn't been seen before, and it's amazing, I have to say, and the future is really bright with a huge potential from these schemes. I don't know, maybe in the future we could have a huge scheme that we could actually change even the name, because the scheme might look a little bit smaller. If it crosses, for example, 10 trillion, that's a whole lot of money, and it's amazing. Now, finally, before we close, yes.
Just on that same point, I think the other thing which government is trying to also provide is, and the question is, how can these schemes invest within the real sector? We look forward to a time when
private sector,
private sector in terms of SMEs as well. So we look forward to that.
Amazing. That's exactly what I was saying. In future, they have potential of even being more than just a collective investment scheme. Amazing. Finally, our time is fast spent, but we can't go away without talking about regulation and Ponzi schemes and all these other things that have come up and broken the hearts of Ugandans who are willing to invest. And most recently, one that closed, you even issued a notice, but people were going to deposit money on the day it closed. You can imagine, there were cameras around and people had gone to deposit money. So meaning these people are still there. And it's possible that there are some people that are actually facing fraud. How is CMA helping in line with these Ponzi schemes?
It's a very, very interesting question, and something that breaks our heart from the capital markets perspective. And which is why we are very, very grateful that you allow us to come and be able to share all these different investment opportunities that are outside, that were within the capital market space, and where someone can be able to invest. We realize, for fear of getting into the current investigations that are happening, but we realize that billions have been lost. Painfully. I can't, it breaks my heart that billions have been lost. So someone has put aside some money, 10 million, with the hope that it is going to grow 3 times within a period of 2 months or 3 months. Now, I think some growth prospects are really scary, are really, really scary. And which is why we try to encourage people. First of all, it's not easy to get a license from the CMA. By the time someone gets a license from the CMA, they are credible. They are good. We continuously supervise these people. Please invest with the licensed persons.
Yeah.
2, what is the CMA doing in regards to all these Ponzi schemes that come up?
Yeah.
We always receive complaints, and thank you very, very much, people who continue to tell us about all these different opportunities or that are skimming Ugandans of their money. And thank you very, very much for that. So we always receive the phone calls and they ask us, but there's this thing that is located on this place and has continued to advertise on, I'm glad SMART does not advertise any unlicensed persons, but they continue to advertise on different media houses. And they continue to advertise and saying, invest with us, invest with us. We try to, and we encourage you to refrain. Before you invest, please feel free to visit the CMA website, www.cmauganda.co.ug. I'll just repeat that, www.cmauganda.co.ug, to check, are these people licensed? Are they allowed to operate within the capital market space? Or are they on the Uganda Securities Exchange or on the Altex Exchange? Or where are they operating? What is their governance structure like? You can't just give us a call and then we can give you at least some guidance. What do we do when we receive your calls? We actually investigate and we do a thorough investigation, and we receive a number of complaints and we check what is this company. We call them over and we ask, where are you asking Ugandans to invest in you? And by time, many times, unfortunately, by time we issue a license, sometimes these companies have failed us. We failed to be able to reach out to them. So by the time we issue out a notice and say, refrain from investing in this company, please note that we actually don't understand this company and they are not willing to be able to raise capital properly from the capital markets. Because why are we here? We are established by an act of parliament to protect you from any other schemes that may come up. So please refrain from investing in any unlicensed manager that is not licensed by either us or the capital markets, or maybe it could be a SACCO. If it's a SACCO and it is regulated by the UMRA, visit the website or call UMRA and ask, this thing is saying, mulete sentezo, later sentezo, then we can be able to invest it. Are they licensed? They're saying they're a SACCO. Please first check with any other regulated entity before you invest. So thank you very, very much. As we conclude, thank you very much, Smart24, for having us and for hosting us on the show. We don't take it for granted to continuously take this message on to all our listeners and viewers out there. Thank you very much.
We don't take you for granted as well. Thank you for sparing the time, and I hope you come back. It has been a very good conversation, and we've had a lot of fun, honestly, on the show. And we've had a lot to learn. The five jazz, especially, that's something. The 5 Jewish jazz. So that's it from us today, ladies and gentlemen. If you missed anything, please feel free to go back to our YouTube and get to check us out. If you want any feedback, please get it through the comment section, but also on X, we can keep the conversation going. This shouldn't be a one-off conversation. It should be an ongoing conversation. If you have any questions, feel free to get them in. We shall be able to get the people to answer them, or we can even answer ourselves, because we've learned now at least the 5 jazz, which we can explain to even our children. So that's it from us, and we are very grateful. Terrence, thank you so much for the time.
Thank you very, very much, Anthony, and to the management of Smart24. Thank you.
Wow, that's it.